Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Plenty of interesting things going on to talk about this week with all-time highs in the ASX 200, some movement in the commodity prices, also any of the stock codes that you'd like me to have a look at. Get them ready. We'll go through them in the back half of the show. And as always, everything today is general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into today's first chart. The ASX 200 up on the screen. And so we have a bullish breakout for the ASX 200 this week. And it's also a week in which the local market has outperformed the US. I'll come back to that in a moment. And then over in the US, the S&P 500 has lost its near-term momentum below July's all-time high. And the question we'll look at is whether this is the start of a longer consolidation. But before we get to that, let's focus in on what's been happening here in the ASX 200. And it's been an impressive week for the local index. Prices tested support, which you can see down here, this blue horizontal bar on the chart, tested support last week, and that was around 8,630. And we spoke about this support in last week's session. I said that I thought it was a key level that needed to hold to keep the near-term bullishness in place, and that's how this has played out. We had a test of the support on last Friday, and you'll see prices briefly traded below the support before trading up and pretty much closing right on the support. And then from there, from Monday, we then saw a strong rally and a swift upward reversal, taking prices up to new highs. I think the fact that prices tried to break down last Friday but didn't attract follow-through selling, I think that tells us a lot. And that's been the case pretty much over the last 4 months when we look at this chart. And that is that the lows through these throughout this period has none of them have really attracted that follow through selling. Each attempt to sell has been short-lived and has quickly been met with buying. And I think the message to take from this is that the sensitivity does remain to the upside. When we look at you just look at how the news flow has been playing out. So seemingly bad news has been brushed off to a large extent. So you just think back to when the RBA didn't cut rates a few weeks ago, when almost everyone was expecting them to cut rates. In some environments, that would send the market cascading lower, but of course that didn't happen. There really wasn't. It was quite a muted impact from the market. And then when positive developments come through, prices go higher. So this is very much a buy the dip environment. It's not a sell the rally situation. As I've been discussing over recent months, the ASX 200, to me, it's behaving like a market that investors are still trying to get into. And I suspect a lot of people, like you look at this panic sell-off in April, I suspect a lot of people sold out during this panic, and many of them possibly are still waiting for a larger dip to maybe try and get back in. But that larger dip so far hasn't occurred. The dips have been shallow and the price keeps rising. Just looking at the latest price action, so this week produced a strong rally in the ASX 200 to an all-time high, and the ASX 200 it's actually had what seems like a rare win over the S&P 500. So the ASX 200 is up from its low last Friday. It's been up as much as 3.3%, while the S&P is up about 2.8% over the same period. So seemingly one of those rare wins for the ASX 200. The equal weight is worth having a look at because this has been impressive. It's actually been the most impressive big cap move of the week. It's at all-time highs. The ASX 200 equal weight is trading at all-time highs, and what's happened here is it's actually had a stronger rally off its low from last week than the ASX 200 index itself. So it's up something like 3.8%, while the index is up 3.3%, and this follows what was a shallow and fairly short-lived pullback from the previous all-time high. So there's the previous all-time high in July, shallow, fairly short pullback, and then the rally off there. And as you'll know, we speak about this quite a bit. I like it when we get these shallow pullbacks, as they're often a good sign that buying interest is supporting prices. When prices can rally strongly, hold on to those gains, hold on to most of the gains, have a shallow pullback, it's a sign that the buyers are stepping up to support the pullback. And buying interest, it often leads to new highs, and that's been the case here. What's also interesting is that we've seen an even stronger rally in the small ordinaries. I'm going to get to that a little bit later, just in a moment, because that's been saying something really important to take in on its own. And I think that this strength we're seeing in the equal weight, I think it's important, and also what we're seeing in the small ordinaries, I think it's important because healthy bull markets tend to be broad-based, and when you get the equal weight rallying more than the ASX 200 index and the small ordinaries rallying more than the equal weight, it's a sign that you've got that broad-based participation. Just looking at the structure of the price action, still have the 50-day and the 100-day moving averages trending upwards. Price is comfortably above those moving averages. So that's the definition of a bullish trend. And like we've been discussing in recent months, I think we should be positioned accordingly. I think we should be positioned according to the price action that we're seeing above rising moving averages. Just quickly coming back to the ASX 200, I'm happy staying long the ASX 200 index, happy staying long individual stocks. That's been the case for a number of months now. We first started talking about this in the about a week or so after that April low, and that's remained the case the whole way up. And I think that when I say that, that doesn't mean we can't get a pullback, we can't get another consolidation, but the overall structure at this time, and as it's been over the last probably 3.5 months, it's positive. And I think the path of least resistance remains to the upside. In these situations, dips and consolidations, they're often opportunities. They're often the buying opportunities. That's how this has been playing out. As always, so I'm using those wide trailing stops on my individual stocks, and that helps me see off these pullbacks when they develop, but they also get me out when the trend turns, because at some point a consolidation will turn into something larger, and that risk management approach through trailing stops is what's helps minimize the loss of capital when things turn around. But at this point, that trend is well and truly up. Now, we'll go and look at the US market now. Just before I do that, though, if you're getting some value from this, please hit that like button, leave us your comment. Just tell me what you think of the video. Tell me what you think the market's going to do. Has it run too far? Is it going to pull back? Or just simply thanks for the video. It just tells YouTube you're watching. YouTube shows other people. Helps me heaps. Please do those things. And whilst you're thinking of it, click on that like button. Now, let's jump over to the S&P 500. And for the first time in several weeks, the S&P 500 has not hit a new all-time high during the week. So instead, we've had a pullback, from the July all-time high, and since then a consolidation below the peak. At this stage, I'm viewing this as a temporary pause in an overall upward trend. Nothing that we've seen so far stands out as being a significant warning sign. It's from a structural perspective, the underlying conditions, they do remain bullish. So the key factors I'm focusing on are the rising moving averages. The 50 and the 100-day moving averages continue to trend higher. And also price is above the moving averages. And the other thing I think which is important to take in is that there's a clear sequence of rising lows and rising highs. That remains the case. So those three core factors remain at a bullish setting. I think a mistake that a lot of people make is that they overestimate the odds of a pullback being a lasting high. And yes, look at all these pullbacks, all these temporary highs and pullbacks. People worry each time: is this going to be something much larger? It happens the whole way up. That's why they say markets climb a wall of worry. But when we consider the factors that I just went through, the rising moving averages, price above the averages, sequence of rising lows and highs, when we consider those, I think the odds favour that new highs eventuate at some point later in the year, possibly after a further consolidation. I think there's certainly scope for some more consolidation, especially when you consider from this April low, the S&P 500, it's up something like, it's been up. It's been up about 33% at the high, and that's just in a 4-month period. So that's exceptional. That rarely happens. So when you consider that, the prospect of further consolidation doesn't seem too much of a stretch, but that's normal. That's all part of a bull market. Prices rally and then they consolidate. It's the underlying trend that determines my positioning. And as things stand, that underlying trend, it does remain to the upside. Just quickly coming over to the equal weight, the S&P 500 on an equal weighted basis. And it's interesting to look at this because it actually hinted at the potential for, or the possibility of, a consolidation last week. You might remember that we discussed that the equal weight hadn't been as strong over the last few weeks, and so the equal weight made a new recovery high a couple of weeks ago. Didn't make an all-time high, a new recovery high, but then it hadn't been able to hold on to its recent gains as well as the S&P 500. So that was a sign that the broader market was perhaps starting to pause. And since then, the equal weight has come back to its 50-day moving average. But again, that's something we see in bullish trends. Like, you can just see it. You can see it the whole way through here. The equal weight, or the S&P 500, if you look at that, or the ASX 200, whatever it may be, these indexes and the indices and the stocks, they do come back to their 50-day moving averages when they're in rising trends. It's a normal part of how these things play out. I think the general progression of rising lows and higher highs, I think that still remains in place. So I think that the overall trend, it does remain up. Quickly coming back to the S&P 500, I continue to think the play here, it's staying long stocks. So rather than worrying about a pullback being a potential top, I think when the moving averages are rising and prices above the moving averages, I think our base case should be that a pullback is consolidation rather than a lasting high. And remember that we're in that the seasonally weakest part of the year, around that August, September. That's when things can get a bit jittery. Not every year, but over time, on average. So if we do see the trend pause for several weeks before potentially moving higher, look, I think that would be quite reasonable. Until I have a good reason to do otherwise, though, I want to stay invested and try and see off these pullbacks and consolidations as they occur. All right, so we're going to move over to the small caps next, with the US small caps, Aussie small caps, go through the commodities, go through your stock code, so heaps more to go through. But of course, that wraps up the free section. If you're not a Strategy Session member, there's a link below. Click that. Come on in, and you won't get the live session, of course, for this week. You get the full replay, and you hopefully be with us next week, and we hopefully be looking at your stocks as well. And it costs you very little for what you're going to get for your investment in doing that. All right, so let's start with the Russell.